Hello, beautiful people. So, this is episode one or day one of attempting to turn $10,000 into 100K. So, as you can see here, I'm using Stock Penguin's portfolio tracker tool. I have just injected $10,000 into my IBKR account, which I have synced with Stock Penguins. So, this is a platform I'm going to use to share my returns over time and so as well to use it to conduct my stock research and stock picking and news, stock idea screening, things like that. So how am I going to do this to turn 10K to 100K? So I think it's very important to first have an objective in mind. So I am attempting to gain 1,000% return, and I have to be realistic about my time period that I am attempting to set aside to achieve this goal with. So I think a 1,000% return is possible within the time span of 5 years. But that said, I cannot just invest in the index or any Magnificent Seven stock based on to achieve this goal. I have to be more aggressive, pick growth stocks. So this is a little bit more of a disclaimer here that you probably shouldn't follow my stock picks if you're not comfortable with risk and volatility. And so why am I doing this? Well, basically, I think it's to share my thought process with everyone in the YouTube world, and to also hold myself accountable to my investment thesis and ideas, and not paper hands my conviction and convicted companies I've already invested into, because I feel like I tend to do that as an individual investor, right? So I have fumbled many bags in the past. So for example, the most recent one was a stock called Xiaomi. I invested back in the $20 range, and now I think hit a high of $60 recently in the Chinese stock market. So I think being transparent with everyone and having constant feedback, ideas generation, ideas bouncing back with each other will help everyone grow as an investor. And thirdly, is to just transparently share and document my learnings and mistakes for your viewing and learning pleasure. So I think everybody wins, right, in this direction. So I think as an investor, it's very important to understand your context, which could potentially influence your biases when it comes to investing. So to provide everyone my context, I'm a male in my late 20s. I am a normal salary employee, not like a millionaire or anything. I'm still drawing salary monthly to get by. I graduated with a bachelor's in finance, so I do know my way around. The simple basic finance theories, your valuation matrix, how to read a income statement, things like that. I also worked in commodities previously and freight trading, so I do understand a little bit about risk management and also how the economy works, right? Because commodities are just based on that. And I was also a management consultant previously. So I think that role helped me to shape my understanding around businesses and how supply chain works. And currently, I'm serving in the business development role in the industrial space. So you can see how my context, right, would influence my biases. So as a late 20 males, I'm single, I'm not married, I don't have any baggage. So I can be a little bit more aggressive in my investment. So depending on your financial commitments with your family and things like that, you're serving in loans, you probably will be more restricted with your investing style. And because of my previous professional experiences as well, I know a little bit more about finance and business in general compared to someone who may be a like a visual um, studio assistant or something like that who spend his entire waking hours editing videos and things like that. For example, your knowledge will probably be limited more to that space, which is also good. You can use it to your advantage, which I will explain later. For example, in my role as a business development in the industrial space, I'll get first-hand experiences and insights into how the economy may be going to take off, because we start from there and it spills off the retail space, right? So going to the how I would turn 10K to 100K. So to achieve that within 5 years, I have to be aggressive in my investments. So I have to invest in growth stocks, and I'm even open to cryptocurrencies and alternative investments like alternative investments like Pokemon cards as well. So a lot of speculation is Pokemon card space, but because of my past collecting expertise and experience, I know the space a little bit more. But mainly for this channel, I'll be talking a lot more about stocks. And also not to clickbait, right? I would also make monthly deposits and contributions to the account with my salary. Maybe I'll set aside like say $500 to $1,000 a month to just inject into the account to grow my portfolio. And I think it's also very important to understand my investment style. I like growth oriented investing to take into but at the same time trying to take account valuation. So a big mistake I made back in 2021 and 2022, like everyone starting to get involved in investing, right? We just invested into whatever names are appearing in the media. So we could have, for instance, a bad example, but we could have bought Palantir at $40 then, and not understanding that its valuations were sky high. But even so, now it's still quite sky high. It dropped all the way down back to the $4 range. So this kind of fluctuations and volatility is something that I would account for because of valuations. So I believe in cycles in everything, even market cycles, economic cycles, sector cycles, company cycles. All of this will shape my investing style into growth names. And of course, I'll share more about my individual stock picking criteria in future videos. So keep a lookout for that. My holding period. So I think my holding period, I would like to stay between a couple of months to a couple of years, especially in high conviction names. But how long I hold will depend on whether my thesis still holds. So why did I invest in the stock in the first place? Is it achieving, for example, is it achieving its growth? Is it stealing market share from other competitors still? If it's not, and showing signs of that in its financial earnings reports, industry reports, I may choose to exit the investment, even if I invested in for only like say 2 weeks or 1 week. Yeah, so it all depends on whether my thesis still holds. And of course, I'll be looking to beat the index heavily, right? So my allocation will be centered towards 4 to 5 stocks. And this is because I believe that the more stocks you hold, the more diversified you are. So you would head into towards naturally towards like a index pegged returns, right? You get returns very similar to what the S&P 500 gives you. But at the same time, you have to be aware that holding 5 to 4 to 5 stocks, right, would give you a portfolio that's a lot more volatile and would be more prone to drawdowns. So especially for example, right, say if I invested in Hims and Hers heavily, it accounts for like 25% of my portfolio, for instance. So if I looked at its price movements, right, over the past 10 years, you'll probably see like a lot of fluctuation. So for instance, from $11, $16 to $11, um, $37 to $50, this kind of extreme movements would shake your overall portfolio's returns heavily. If this stock, say for example, makes up 25% of your portfolio versus just maybe 5%, right? So you have to be aware of all this volatility. And another thing is because like if you look at the investing grades, like your Bill Ackman, your Warren Buffett's, all of them they don't hold a lot of stocks. Don't hold so many stocks to the extent that the returns will be similar to the index. So the less stocks you hold, the more convictions you have, the more capital upside you may see. But be aware of the volatility and drawdown. And fourth, so I am okay with holding cash, right? I know that a lot of people say that cash is trash, you should put your money to work. But does it make sense for you to invest heavily where valuations is say 500 price to earnings ratio versus to when it's a 50? There are times to be aggressive and there are times where you have to be more defensive. And I am someone who don't like to give in to FOMO. I like to pick my spots nicely where when I would invest heavily. So this could mean that I may miss significant upside, but at the same time, I may protect myself from significant drawdown. So it's very important to know when to go in heavy and when to be a little bit more defensive. Maybe if you really feel the FOMO, just put a little bit of money in, invest a little, at least you get skin in the game. And always having skin in the game will lead you to be more, diligent in your portfolio management and your keeping up the dates with the companies that you invested in. And yeah, and also like I mentioned, I'm very protective of my downside. I hate drawdowns. Though I understand that I would have I would see drawdowns, especially since I am looking to be so aggressive in my portfolio. Heavy conviction, heavy investments into growth names are probably gonna see drawdown. But at the same time, I mentioned, I'll try to time the market, but you need to be aware that timing the market has its downsides, like I mentioned earlier. And I will also use a mixture of technicals for entries, and in general, I would use fundamental and narrative based investing. So, for example, if I feel that AI still has potential to go on, I may invest in names such as Palantir, bad name, bad example here, but Palantir, your Nvidia, things like that. I'll continue investing in them heavily. Yep. So as I mentioned, what I hope to see over 5 years will be a return from 10k to 100k over a span of 5 years. But my portfolio will probably see returns like very very like aggressive movements because of how concentrated it is versus someone who's investing in the index will probably see something like this, but probably wouldn't get the returns that I want. So stick around on the journey, and I will share my market outlooks, lessons along the way, what stocks I'm looking at, and why have I invested in it, why have I exited it over time. Yeah. So stick around, and looking forward to taking your feedback as well into consideration and any Q&A in the future as well.